afternoon, everyone, and happy Thursday. You have Alyssa Corum here, and I am joined by Ken Shree. We're going to break down the strong action today in the market, as well as several top stocks. Hey, Ken, what do you have for us?
Well, we're going to take a look at a big earnings report from ServiceNow, a big reason why the Nasdaq was able to rally sharply today, and also take a look at Pinduoduo, today's stock of the day, and finally Qualcomm, which reports earnings next week and technically looks pretty good.
All right, let's do it. But first, a look at the major indexes. We have the Nasdaq here closing up 1.6% for the day. The S&P 500 up 1.2%. The Dow lagging quite a bit, up 0.5% for the day. But strength in tech here after a very disappointing session on Wednesday, and a lot of exciting earnings reports out after the close today as well, which we will kind of weave into the discussion too.
Yeah, definitely. So a pretty good day for the Nasdaq. You can see on the daily chart here, it did manage to hold support at the 11,000 level, so that's good. The Nasdaq on Wednesday closed about 4 or 5 points above the 11,000 level, so a nice bounce today. There was some selling late in the session as maybe investors got a little worried about these high-profile earnings reports after the close from Alphabet, Facebook, Amazon, and
Many
Apple.
others.
Yeah. So
Apple,
yeah,
Twitter,
exactly. So 4 of the 5 FANGs,
everyone.
everyone, exactly. So, but I know we're going to take a look at the Qs because the Qs look to be trading nicely higher in after hours trading. So, but you can see the Qs kind of closed off highs today as well, still below the 50-day moving average. But at last check, Alphabet was making a 8 or 9% move in after hours, and Facebook was up about 3%. And like I said, we're going to see how Amazon and Apple fare as well. We won't hear from Apple probably till bottom of the hour.
Right. And before we move on to today's stocks, just a little bit more color on what these earnings reports could provide come tomorrow's session. It's a super key week here. And of course, we have more uncertainty on the horizon come next week and, even overhanging into the remainder of the year. But potentially, if these strong gains from a couple of these names that we're seeing right now in after hours trade can hold up, maybe this is the turnaround in the market that we've needed.
Yeah, it could be just what the doctor ordered. So, very busy week, busy earnings after the close, and we're still in the heart of our earnings season, but still looking at Alphabet here up more than 8%, and the Q's up about 0.5% in after hours trading. So this could give the market a lift tomorrow.
All right, well, let's take a look at some stocks that moved on earnings in the regular session today. ServiceNow being one of them, up 5.5% today after coming back all the way to its 50-day line, what's been a key support level for the stock. And we did see acceleration on the top line, a deceleration in earnings, but still up a strong 22%, Ken.
Yeah, no doubt. And you can see it paid a visit to its 50-day moving average on Wednesday, and then today it really reclaimed that alternate entry of 501.92 with conviction. So by my eye here, this stock still looks to be in buy range. We still have a market uptrend under some pressure here, even in light of Thursday's nice gains for the major stock indexes. But it's funny, you don't really hear ServiceNow talked about that much as a COVID play. You hear about Zoom Video and Peloton and many others, but CEO Bill McDermott was interviewed on CNBC earlier today, and he said the company's software platform is really at the epicenter of remote work, and he expects this remote work trend to continue well into 2021. So go ahead and call ServiceNow a COVID stock, absolutely.
Yeah, a ton of enterprise software companies, seeing some gains in the wake of the coronavirus pandemic. But while we would typically say that a stock like this is actionable, there's heightened risk right now present in the market. How do you watch this one in the coming days and weeks?
Well, exactly. I mean, again, we can't remember that we had a pretty harsh sell-off on Wednesday. The big percentage declines and higher volume that came with the S&P and 500 and Nasdaq on Wednesday. This was just a classic example of a distribution day, and we've got 5 of them on the S&P 500 since the beginning of the month. So the market uptrend is still a little wobbly here, despite nice gains for the market today. Indexes are still, below their 50-day moving averages. So hopefully these earnings reports after the close are going to, help mend the market a little bit. But it's still generally, risk level seems elevated when it comes to new buys. And we've been, on IBD Live, as you well know, been just talking about the importance of playing some defense here and not being, overly aggressive with new buys. Maybe just nibble here and there very conservatively, and don't be afraid to take profits, quick profits, if you can get them.
Good point. Well, shifting gears here, let's check in on Pinduoduo, ticker PDD, out of China. A nice retail internet stock that we've been keeping tabs on, clearing a handle entry today, Ken, up about 4.6%. It's still off of its all-time highs from earlier this year, but it has been on the up and up.
Yeah, I mean today qualifies as a breakout. Even when the Nasdaq was strong and holding near highs in afternoon trading, Pinduoduo was kind of pulling back off highs. So it was a little bit disappointing. But I will say that Brian Deegan, one of our tech writers, did a great job writing about Pinduoduo in today's stock of the day. That story is on the homepage of investors.com. So be sure to check that out. But this is really when it comes to institutional quality stocks in China, there's really only a handful of them, and I would include Pinduoduo as one. JD.com, which we've talked about on recent shows, and Alibaba as well. So you got to be careful when you're, looking at China stocks. Some are very speculative, but the real institutional quality names, again, Pinduoduo, nice breakout today, and JD.com, which is ticker JD, and Alibaba, which reports earnings next week. So there are some real high quality names in China.
Yeah, really strong chart there for JD. Checking in on Alibaba really quick. Same story there as well. But before we move on, for Pinduoduo, you talked about sponsorship being important, especially when you're, looking at China stocks, but in general. And if you open up this right-hand panel here on MarketSmith, that's what I was doing a little earlier while you were talking. You can easily see right here the IBD Mutual Fund Index. Those are top funds that we like to track and see who owns the stocks that we're interested in. And Fidelity Contra Fund ranks among the best. They have a position in PDD, so that is always good to note.
Yeah, Contra Fund has such a long-term track record of outperformance, and even in the MarketSmith sponsorship block that you pulled up here, you can see that sponsorship in recent quarters has just been going up and up and up and up. So sponsorship is so important for a stock's outperformance, and Pinduoduo certainly has it.
All right. And last but not least, let's check in on Qualcomm, QCOM, gaining ahead of its earnings report less than a week away, with a 4% gain, pulled back close to the 50-day. It's also been a key support level for this stock. The last earnings report, Ken, we saw a pretty big move for Qualcomm. Do we think there's potential that could happen again this quarter?
Well, I mean, the chart seems to say so. We've had two big acquisitions in the semiconductor space this week, including today's announcement where Marvell Technology is going to buy Inphi, and Qualcomm is a big player in 5G. So people wondering what the best 5G stocks are, you'd have to put Qualcomm right up there. But I think technically the stock looks great. It's still in buy range here from a 124.03 buy point. Yesterday's gap down brought the stock close to its 50-day moving average. Didn't quite touch the support level, but it outperformed the Philadelphia Semiconductor Index today, and wouldn't be surprised to see a nice earnings report from Qualcomm next week. But chart looks great, and look at that relative strength line shooting into new high ground, and even Qualcomm isn't at a new high yet, so that's a sign of strength as well.
Yes, and we can't emphasize that enough. We love seeing that relative strength line at a new high. before the stock hits a new price high, especially. And you are, like you said, Ken, we're seeing that right here. So that indicates something special for sure, but we're going to keep tabs on this one. We have a lot of stocks reporting earnings late. As we mentioned, a lot of key names, a lot of really big names that we ran through for you just a little bit, but after hours action isn't always directly translated to the following session. We will give that caveat, but I know for sure there will be plenty to discuss tomorrow morning on IBD Live, Ken.
Yeah, looking at the Qs, the ETF, which tracks the Nasdaq 100, that actually has turned lower in after-hours trading. So this 8-9% gain from Alphabet has already been shaved down to 4%. And Facebook was another earnings report that we're watching. That stock looks to be now down 3% after an early pop. So after-hours trading can be volatile. We'll just have to see how it shakes out, and hope the bulls are hoping we get a good solid open tomorrow.
Yeah, and if we don't, because there's the potential for that as well, I think that speaks to just the overall level of uncertainty that we have with an election less than a week away, and a couple of other factors as well that are creating some heightened volatility in the market.
Yeah, again, we lowered our market outlook down a notch on Monday, and we kept it where it was even after Wednesday's sell-off, and certainly Thursday's gains weren't enough to change the outlook and turn positive again. So bottom line, we're still in an uptrend here that is under pressure with the indexes below their 50-day moving averages. So we're still talking about a very defensive approach here. Still okay to be trimming gains and some nice winners. And if you have stocks that are not working and maybe you're down 1, 2, or 3%, kind of raising some cash and cutting losses short also makes sense in this type of environment.
Well, we'll have to see what we get, and we're going to be prepared either way, no matter what the market throws at us tomorrow. So tune in to IBD Live to see how our crew is handling Friday's action and individual stocks by going to investors.com/IBD Live. We look forward to you joining us. We'll see you then, and we'll see you right back here tomorrow.